So now let's get over to the yield curve. Here's the yield curve that everybody just keeps moaning and grumping about. Let me explain it to you. Here's where the yield curve is right now, where it is today, 5.152. Here's where, let's just go back, back to 2020, just say. Maybe that's okay. This is what a yield curve should look like. You have low rates down here, even 0%, and it upticks. Think of it as you're putting your money aside. And if you want to give somebody your money for, a month or two, and they're going to say they'll give you a rate of return at 2 or 3%, well, if you wanted to give them your money for 10 years, you're going to want a higher yield. It's just the risk return basically charts. This is what a normal yield curve should look like. Not like this. Let's go back and go into what it is now. This is what's wrong. This is right through here. This is basically where the Federal Reserve is holding rates. Okay, I know that's not the exact way to look at this, but the Federal Reserve kind of controls the front end of this curve. So, and how do we know? Well, if we go over to here, the Federal Reserve, they control the federal funds rate, 4.25 to 4.5. So let's get over to here. It's basically between 4.25 and 4.5. Let's say there. Okay, that's the problem. Okay, we got long-term rates all the way over here, up here. So this should be down here. This is where President Trump keeps coming in and saying to the Fed, guys, you need to start lowering rates so we can get a normal yield curve. Because the 10-year Treasury over here was expected to go to like 5. It keeps coming down. So we need the front end to come down. And this is basically what the Federal Reserve controls. So that's the battle that's going on between the Fed and the government right now.